It's a funny thing with Tesla institutional investors and the media. They don't seem to be bothered at all, saying the exact opposite of what they said just a few months ago. Seems now they're becoming Tesla bulls. For years, Bloomberg has been writing hit piece after hit piece about Tesla. Well, now their own editor-in-chief, Matt Winkler, is saying Tesla critics are wrong. Just take a look at the stock price. We'll watch that video. Second, Gene Munster of Deepwater is saying Tesla's autonomy business is much bigger than any feud with the president. 80% chance this will blow over. Third, Goldman Sachs has raised Tesla's price target to $315 from $285 to account for better than expected vehicle deliveries. And finally, we have a new report from Bank of America now recognizing that autonomous vehicles are not only real, surprise, surprise, but that they're having their ChatGPT moment. In and about phase, they now say, oh wow, the tech actually works. But, and it's a big but, guess what? Not a single mention of Tesla. Baby steps, I guess. We got Larry Goldberg joining us today. Thank you, Larry.
Great to be here, Herbert.
Yeah, one of the things I have a lot of fun with you is each week we do a roundup of institutional investors. We play their videos, we listen to what they say, and tracking who they are and what they say. And of course, as we expected, as things change, they now start talking. Oh, all of a sudden, autonomy is real. Before, it was impossible. Never, not till 2040. We'll continue watching that. But this one's very interesting. This is Bloomberg. He's the editor-in-chief. I don't know. I think my guess is that he's been watching the articles be written, and he thinks that I better stand up and kind of start defending Tesla. But I think you're the editor-in-chief. So I'm confused. Maybe you can explain that for me a little bit. This guy's name is Matthew Winkler. Let's listen to what he says.
How difficult is it to remember what a juggernaut, what a success story Tesla is in the face of all the headwinds and news articles about Elon Musk right now, Matt?
Pleasure to be with you. And you're quite right. Omitted from the prevailing narrative, including everything we just heard, is that Tesla still is the world's largest automaker. It's the 9th largest public company. It's worth more than the gross domestic product of Saudi Arabia. The top 10 automakers are just, say, 75%, 78% maybe, of Tesla's market value, which is more than $1 trillion. So that's a really important point to make, which is, amid all of this doom-mongering, why is it that the people with the most at stake, who are the shareholders, somehow are missing from everybody's story, including this morning when the sales were first reported? People thought that was the lead. The sales are disappointing, and yet the share price is up the most since June. So what does the share price tell us? It tells us that Tesla is a lot more than its vehicles. It is the autonomous driving. But it's so many more things other than that. It's robotics. It's a visionary who wants to get to Mars, and he's taking everything he's got, which is artificial intelligence, and applying it to his products. And the shareholders see that because the shareholders are constantly looking at the future, not at the past. And one thing I would say about the vehicles, everybody thinks there's a demand problem, but the Model Y was actually refurbished, if you like, this year, which accounted for some of the production slippage. The sales are way up in Norway. They're way up in Spain. So the prevailing narrative really doesn't cut much there. And the Model Y, we forget, was the best-selling vehicle in 2023 in the world, the best-selling vehicle in 2024 in the world. Looks like it's going to be the best-selling EV vehicle in 2025. So those are all things that are missing from the narrative that you've been sharing so far.
It's all been missing from the narrative that you have been sharing so far. I mean, is that funny? Like, yeah, how many Bloomberg articles have we seen written and they did not mention the Tesla Model Y? The factories are shut down right now because they're doing a transition to a new model. They didn't mention it. They just say, oh, sales have fallen this month over last month.
Well, we have to recognize that Tesla sales are down. That's a fact. But he encapsulated the bull argument. People tell me, oh, you retail shareholders, you're Uber bulls, you talk all this stuff and it's impossible. But let me remind everybody that fully 60% of the shares of Tesla are held by very large institutions and very large institutions. And let me remind everybody that institutions are paying these prices. It's not just the retail shareholders. It is the Winklers, the editors. It is the institutional analysts. It is the institutional investment managers. Never mind the analysts. It's the institutional investors managements who are looking at Tesla, understanding Tesla, and buying Tesla. So, all the negatives and all the bad talk and so on and so forth, Winkler knows. This editor understands.
Yeah, I will push back a little bit on this idea that, you just look at the stock price. The stock price should tell you that that somebody's wrong. I get it. There's buyers and sellers. There's a market. But also, often, I think stocks are always wrong. Like somebody's getting it wrong, and that's why I'm going to invest now.
Stocks over time are not wrong.
Right.
At any given price, you can look at a stock price, and there could be, an iceberg that you're about to hit. Yeah. There's no doubt about it. But when you take 2, 3, 4, 5 years of a stock, there's a very high probability. I'm not saying it's absolute, but there's a very high probability that you're looking at true value. There's nothing perfect in this world. The economy could slide off a cliff tomorrow. So all these numbers we look at from week to week and month to month could all be wrong. But by and large, the stock price tells us something.
Yeah.
And that's what Winkler's saying. He's saying, look, there's a reason for the stock price.
Yeah, no, that makes sense. Multiple years is different than, of course, it could be off this year. AJ did an analysis one time showing the PE ratio for Tesla, and it's consistently at 70, 130, but it's been like that for years. Like the median was 70, but it's been like that for years at over 100, and there's a reason. The reason is that Tesla's not a car company, it's a tech company, and these techs continue to improve. And eventually they will turn into earnings. And some people will bet on that. And others, no, it's a car company.
I'm a venture investor. When I invest, I accept that there's going to be a percentage of companies that are not going to make it. But I don't value a company based upon its earnings or its price to book ratio. Right. I don't do any of that. I look at what the chances are of success and what the value is of success, and I factor that down according to of what I think are the odds. That's how I look at Tesla. And I'm just shocked by people who will sell shares because they get scared that share price is going to go down. Well, of course the share price is going to go down. Tesla is extremely volatile. It's been down to 100, it's been up to 400. I mean, that's the nature of it. In venture capital investing, we don't get to see the price on a day-to-day basis. And if we did, believe me, it would fluctuate even more than that. So,
because they're startups.
I try and avoid this whole thing about what is the stock price today and what is it likely to be tomorrow. And I certainly don't sell because I'm expecting a low, production report tomorrow morning.
Let's listen to the rest of his interview.
Matt, you point out in your opinion piece that by Tesla's own description, it's a full stack technology company. I've written a lot about that as well. And the most bullish names on the street, on the sell side, their valuations are predicated on this vision of robotaxi and Optimus. But in the here and now, the sales are driven by the sale of cars to consumers. When does the inflection point come where revenues are derived largely from software?
Well, I would just pay attention to the share price because, what motivated my colleague Shinpei and I to produce this piece is all through this year, headline after headline, story after story from everywhere was, as we said, bad to worse. And yet, through it all, everybody is omitting the great parenthetical clause, which is Tesla is still worth more than the 10 biggest competitors combined. Why is that? Why is it that Toyota's valuation is a fourth of what Tesla is? Why is it that General Motors, which you referenced earlier in this program, is just $50 billion and Tesla is $1 trillion? And the answer is there's a lot more to Tesla that people are not looking at. And the best place to go is the share price, because the share price tells you what the relative value of Tesla is every single day.
Basically,
Basically, the guy's saying what I said. Almost verbatim.
Yeah. I interviewed Nicholas Colas, and Nicholas Colas had a great answer for that, and similar to what he's saying, which is, okay, so he says the question has been for so long, why is Tesla worth $1 trillion, which is more than the top 10 automakers combined? And you can, they do this thing where here's all the automakers here. Look at Toyota, GM, they add them all up. Their market cap does not even get to Tesla. They're trying to say to you that Tesla's overvalued. This is ridiculous. This is autonomy. And Nicholas Colas, who's an automotive industry expert, basically said, alive, dead. So the investors know that when they want to invest in Toyota and GM and all these other car companies, when I think people realize that they will be dead in the future. They're not making a move to EVs. They're not able to show profitabilities. They're not making moves to autonomous cars. And so that's what people are doing, is making their bets.
I agree.
Yeah. Final thoughts on that?
Yeah, I think what we have to do is we have to look at Tesla through the same lens that we look at so many companies. If you look at NVIDIA, there was a period when NVIDIA was right down. Its price of NVIDIA was functionally $23, $25 a share, compared to today's price, split adjusted. Why? Because people just didn't understand what was coming. They just didn't see the tsunami. They didn't buy the tsunami. Nobody was selling them the tsunami. So, the market can make mistakes to the high side, and they can make mistakes to the downside. The real issue is what is coming. Is Tesla going to become an energy company? Is Tesla going to become an AI company? Is Tesla going to become an embodied AI company? Is Tesla going to become a robotics company? Is Tesla going to become a rideshare company? These are the questions that should be asked. And if the answer is yes to many of those, then the value is extremely high. If the value is no to many of those, then Tesla is horribly overvalued. None of us can see the future, but what we can do is look at the past performance of Tesla and what Tesla has done from a product point of view, what is delivered from a product point of view, and put our bets. I mean, red or black. It's that simple.
Well articulated. The other thing, though, about Tesla is not just, they're a tech company. Yes, I see they're making progress, but it's Elon Musk. Elon is throwing bombs left, right, and center. But here's Deepwater Munster, Gene Munster. He thinks that the autonomy business is bigger than any feud with the president. He says, forget the noise. It's all about autonomy. And he also thinks that 80% chance this blows over and they call it a truce. Let's listen to what he said.
The thing that's critical for Tesla investors to remember is that what's going on with the business, with autonomy, the progress that they're making, albeit early, is much bigger than any feud that is going to happen week to week between the president and Elon. And so I'm surprised that I understand the reaction, but ultimately I think that cooler heads will prevail. And if they don't, the autonomy is still coming one way or the other.
How do you see it, AK?
Logically, they should have not fought ever. The whole idea.
Yeah, but here we are.
Exactly. So when you're asking, do I think there's going to be a truce that's going to hold? I don't know. There's no logical explanation for why they're fighting now. And so therefore, I wouldn't use logic into the future to say they're not going to fight in the future. And I think that if you look at Elon Musk, you have to be saying, what are you doing, man? You're jeopardizing not only Tesla, but probably from a larger extent, SpaceX. So it's incumbent upon him to stop antagonizing the president. He's talking about how he's going to potentially form a new political party. I think every Tesla shareholder was relieved when he left the White House and said, I'm going to do something else, and they want him to be out of politics and be focused on his companies.
What about the Tesla customers, or even the prospective ones, that were mad at Musk for being close to Trump in the first place, and are now don't want to see it end. They're like, more. Go ahead. Go after him some more.
I don't think the guy who has the bumper sticker on the back of his Tesla that says, I bought this before I knew Elon's policies, is going to go out after this Twitter fight and then take it off the car. I think it's going to take a long time to undo some of that damage with the more progressive and liberal buyers of Tesla that bought it for an ideology, now that he has been so close to Trump. I think the only thing that happens as he stays in politics is potentially more damage on both sides.
Yeah. What are your thoughts on that?
I have to agree. I always say Elon and Trump are very much alike in this regard, that Trump practices the art of the possible in politics. However, Elon finds himself practicing the art of the impossible, because really that's his practice in his business. He always attempts, that which we normal mortals, we ordinary mortals would consider impossible. I think he sees the same thing in politics, and I have no doubt he's going to be successful in it, but I don't think he's going to give it up easily. I mean, he feels, he feels driven to save the country. He feels driven because he feels the country is at risk. And it's simple, it's simple economics. You can't keep spending more than you're earning. You can't. Not if you're ancient Rome, and not if you're, the modern United States. So he's very driven, and he feels that he has to do something about it. He feels personally responsible for it. So he's practicing the art of the impossible. What does it mean for Tesla? Well, it's not great for Tesla. The impact on Tesla, we've already seen. The stock would easily be beyond 400 if we had not had this politics at all. I mean, go back to July last year, and Tesla and Elon does not get involved in the presidential election, and fast forward to today. Some people say the Republicans wouldn't have won the presidency. Maybe. It's more than possible, but Tesla would be in a different place today.
Interesting.
So yeah, I support Elon in what he's doing politically. I think he's doing a very good thing. Trump is trying to run the country from what is possible, and he knows that with this Congress, the only thing that is possible is the bill that is getting passed right now. And he's going to he's going to try and keep his coalition together. He's going to try and win both houses again in the next congressional elections, and then try and implement the plans that he wants to implement after those elections. Elon doesn't compute it that way. For him, it's the art of the impossible. He has to see black and he has to see white, and he's going for it, and he could succeed.
But it sounds like that he's going to do what he's going to do, and then it's just Tesla investors will just have to continue living through this, overhang, whatever you want to call it, continued, uncertainty of what might happen.
Yes.
Yeah. So, institutional analysts surprisingly are actually increasing their price targets. So we've got here Goldman Sachs from 285 to 315. Now, these guys are still very much focused on vehicle delivery. Their forecast was 365, and the consensus was 394, but the deliveries was 384. So it was higher than what they said, meaningfully better than what they did, and that's why they raised their price target, but kept a neutral rating. So,
well, of course they keep a neutral rating, and moving it from 285 to 315 is just recognizing the reality of what the price is, even in the face of what is significantly poor news. So I don't take this as very important. I mean, Goldman Sachs has been a fairly supportive analyst up to now. He hasn't put it on a negative rating. He's kept it neutral for some time now. But when Goldman finally wakes up is when Optimus starts delivering. I mean, even autonomy to them can't. It's the difference between Goldman and Morgan Stanley is just incredible. I mean, it's completely different attitude.
Okay, so there was a Bank of America report that's talking about autonomous vehicles.
Yeah.
So they actually say that, can you believe it? So first of all, they wrote a report on autonomous vehicles. And they're actually not only saying autonomous vehicles work now, but they're saying that there's a ChatGPT moment. 186 million robotaxi miles already driven. AV market to hit 1.2 trillion by 2040. NVIDIA and Caterpillar named top AV plays. Tesla not on the list. Is Wall Street still underestimating Elon? So it's just funny that they did this. AVs are no longer a moonshot, autonomous vehicles, and are undergoing their ChatGPT moment thanks to advances in AI, falling sensor costs, and more supportive regulatory environment. AVs use extends beyond the car, citing over 200 operational AV projects globally. So they're looking at it. The robotaxis already operate in 7 cities, with 20 more expected to follow. So what are you thinking about this report?
Well, for those that study the subject and those that understand and those that drive autonomous cars are a lot closer to the subject. So I don't place much credence. All of these analysts have proven to be false prophets over the last 5 years. They've all missed Tesla. Well, most of them have missed Tesla. And they'll miss the next phase of Tesla. That's my view.
Yeah. It's how they just do an about face. It's like, no, autonomy doesn't work. Nothing's happening. And then all of a sudden, oh, it's here. And then they explain it away. Here's what they say. What's changed after 15 years of promises? The answer is said to be in key AI breakthroughs, digital twins to reduce on-road testing, the use of language models to interpret decisions, and neural networks that continuously learn how to drive. Oh, boy, isn't that what Tesla's been talking about since version 12?
Yeah, no, they've been talking about it for 10 years, actually.
Yeah. So it's Bank of America. But I guess that's the other point, though, right? I mean, it's like that's what they'll do, is they won't do anything. But then when they start getting on board and they start writing about it, and then the next thing we're waiting for is for them to actually put it into the price targets. Right now, they still won't do it. They'll write these reports. They'll say, hey, yeah, it's real. It's here. But then they won't put it in the price target quite yet. Until, what are you thinking they're waiting for? And just...
Yeah, it strikes me that their price targets are way, way, way too high. Because given that they regard Tesla's autonomy as not competitive, they should be valuing just the car company. And the car company is not much more than $70 or $80 worth per share. So it seems that they are either dramatically too high in their valuation, even if it's 280 or whatever it is, or they're somehow including autonomy in and they're not talking about it. So, it doesn't compute. It just doesn't compute.
Yeah, it computes very easily, Larry. You take a look at the current stock price. That's your price target. And then you say, oh, it includes this and includes this.
I don't have that level. I don't have that bigger brain to figure that one out.
It's very simple. I'll map it out for you.
Thank you.
Whatever it is today. Because that way, next year, hey, guaranteed I hit my price target.
Yeah.
Oh, that's fun. Okay, well, hey, this is great. I just think that there's two things we're dealing with, right? You have the institutional analyst, and then you have, as you said earlier, these guys are 60% of investors, not the analysts, but the actual
institutional buyers, investment. Yeah.
And then there's the other side, which is the media and the retail, kind of the brainwashing of retail. But you finally have this editor standing up and going, why are we writing these articles that are clearly something's wrong with it? And so it's interesting that they actually felt the need to write their own op-ed piece. I noticed that he was...
remember, he's not the editor.
Yeah, it says editor-in-chief emeritus. Emeritus, yeah. Which is like, okay, you're not really the editor.
He's retired, yeah.
Right. Yeah, previous one. So, do you think that that's going to have an impact? Because I don't know who he is, and I don't know if he's like revered or nothing.
It won't have an impact because these people have an agenda. The agenda is pretty darn clear. It's been clear for a long time. People thought we were crazy saying they have an agenda. People thought we were crazy saying that they have a bias. Mm-hmm. But they have an agenda, they have a bias, and it's absolutely clear from how they cover the subject.
Exactly right. But it's fun to watch this and see how it evolves, and they will eventually, I guess, one of us will eat crows, either us, me, or it's them. And at this point, it's looking like the technology works now. So it's hard for them to say anymore at this point. It doesn't. Now it's like, okay, how fast will it grow? We'll watch it. We'll watch it. Thanks, Larry. Follow Larry on his X account at Tesla Larry. Thanks, everybody. Bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.